Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Going through the comment section, I'd like to answer some of your guys' questions, give you my opinion. Again, it's just my opinion. My opinions are mainly derived from looking at history, and history is what guides me. And all we're doing, when I say we, like Scott and I were doing in his interview that I had with him, is we're just looking at history, comparing where the psychological thresholds are, and then looking at the gold ratio because that's an inflation adjusted number. It level sets everything, I guess, to itself. It's a level setter where you've got this standard that you can measure against. When people don't measure against a standard, what do? You get nothing. You just get an opinion, like a flat out, way out there opinion. You have to measure it against other things during that time frame, and that's what makes that's what I think will repeat even in this bull market. And we'll see what happens. Obviously, no one knows the exact future, but history does rhyme, it does repeat, and knowing where the psychological thresholds are is absolutely critical as an investor because that's your valuation cap, so to speak. And somebody said, "Thank you so much, Scott. Thank you, Andy, for such a good interview. I was literally on the edge of my seat. Had a calculator just out like Andy did." So one thing that I've been trying to discern for a couple of years now is the timetable for this commodities cycle. Last year, I thought oil would be short-lived and that I would be in and out. After much profits and more info and observation, in great part due to your concise and sound approach, Andy, I now realize we will be riding the oil bull for some years to come. Uranium, on the other hand, really looks like it may be very violent, but a shorter squeeze spanning, like Scott mentioned, 12 to 18 months from launch to peak, which, let's be honest, we haven't launched yet. And no, we haven't. So to finally get to my point, here after being long and drawn out, it would be great to see you and a guest like Scott brainstorm the possible roadmap for this decade and how it plays out if it's U308 first in line, then the battery metals and oil, then bringing up the curtain close silver and gold as an example. Well, I'll do this with Scott. We'll go back and forth on a whole bunch of different stuff. We also talk outside of doing videos and interviews. So yeah, we'll do some cool stuff there. But what will my opinion? I'll give you my opinion here on kind of the roadmap. Usually, what you see going first is oil. Well, you'll get an initial spike of gold and silver. They'll lag for a while after that initial spike. That was the 2020 spike, the great 2020 spike of gold and silver. And then it'll relax a little bit, and then energy takes off. Oil specifically, natural gas, coal. The energies take off, and then since energy is used to build everything, it infiltrates its way through everything inflation-wise. So then you start seeing the inflation in consumer price index numbers. You'll start to see interest rates go up. And that's when the behemoth, the ape strong silverback total bull market comes for uranium. And again, we can't pinpoint the exact timing of this. We can't. It's too difficult. What we do know is that when interest rates go up, the rotation of money starts to happen, and that's when the big boys start moving money. At what exact point? Well, I don't want to be exact, but I can tell you this. Investing isn't about making predictions and getting predictions right. That's not what it's about. It's about identifying trends, identifying value and trends, and jumping on the trend before everyone else. That's really what it is. And then knowing when to jump off the trend. So it's more about identifying that a trend is coming and then positioning for that trend. It's not about nailing a price prediction or nailing some sort of, how can I say it? Because I mean, what I see with a lot of people is they put on price predictions. They're like, oil's going to 30 and oil's going to 150 and oil's going to 250. It's like, guys, we don't need the predictions. You don't even need a prediction. What you need to look at is a way to gauge if something's undervalued or overvalued, and then to gauge if something's turning in favor or out of favor. I mean, that's really it. So a ratio gives you both of that. It tells you when it's going into favor, when it's bottoming and turning, and it tells you if it's a good value or not. So a ratio is kind of doing that. The market conditions are just another way to validate that the ratios are in fact turning and are valid. So even if it like kind of turns up, if your market conditions aren't turning up, like interest rates, inflation, and all that, well, then it's probably just going to hit the trend line and come back down, something on the lines of that. But it's about positioning, position sizing, and getting the big trend right. If you can do that and you can sit during the entire big trend, your entire life will be changed. One, you'll make far more money. And what you're going to see is you're going to see people like myself, people like Scott, people like whomever else who've been in the markets for 20 years or something like that, 15 years. We all started out trying to play the short-term game, and it just doesn't work. it's one, it's hard, and two, the gains aren't that big. So it's what we turned into. And when I say we, I'm talking about Scott, because we just had the interview, and that's who you're replying to, is we've turned into the big trend identifiers and then riding the big trend. That's all we do. And riding the big trend is going to get you the big money. It's going to get you really big money. But you have to identify when is a trend turning and when is it turning in favor and out of favor. And I just use a whole bunch of different things to do that. I use technical analysis, I use ratios, and I use market conditions and leading indicators that I found that work in the basically here. I'll explain kind of how I found that is, and what's crazy is when I was talking to Scott, we have a very similar approach. Is we basically scavenge through charts. Charts, at least speaking from my experience and opinion, is the only way to gather information completely it's the rawest form of data. It's untouched, it's unopinionated, it's whatever. So when you listen to data from somebody talking to you, even like you're talking with me right here, I have an opinion, I have a background, I have a slant, I have a paradigm, I have all these things that I'm spitting this to everyone. Everyone has it, no matter what. You could say it's biases, you could say it's whatever it is, life experiences. We all look at things from a certain perspective, and then we read the data and then interpret the data and then spit that data back out. But there's an interpretation phase that it goes through. So the charts is the cleanest way to look at the past without the noise. The noise is reading it in an article and reading someone's slant or paradigm or bias or whatever it is. A chart just literally says, here's the data. Now, then it becomes a solving puzzle game when you've got all these different charts in front of you, and then you say, okay, this is the data. What can I do with it? And then you can literally weave whatever story you want. And then if your story works out, you make a lot of money. If your story doesn't work out, you have to go back and say, okay, what's wrong with the story? What's wrong with what I put together? What's wrong with the analysis, or what's wrong with the data that I'm not seeing? And then you refine until you get something that works very well. That's what I've done. And what you notice is when people, or at least when I look at things, and I noticed Scott did this too. It's kind of weird. We do the same exact approach. It's ridiculous how it's uncanny how aligned we both are with each other. So when our approach and when we look at things, it's crazy because the first thing he did was he looked at all the charts, and that's exactly what I do. I go through an entire sector, and I say, okay, we've got all these companies. I look at all the charts. I don't even look at the fundamentals. Because when you look at the fundamentals, it's not going to tell you if something's good to pop or not. It doesn't mean much yet. But if you look at the chart first and you say, wow, this chart looks amazing, you start digging into the fundamentals. Whether the fundamentals might be the sector that it's in, or the company itself, or both. And then you start looking at the balance sheet. You start looking at all that different stuff. So my first step when I look at things is from a technical analysis standpoint. And then I start looking at the entire sector. So I look at a company, I say, wow, that chart looks amazing. I look at the entire sector. If they're all breaking out, or if they have broken out and this is a laggard, it's game on, baby. It is game on. And that's what I did with Intrepid Potash on this channel. When we were buying it below the breakout, I said, okay, everything else is broken out. It's running. This will break out. Just give it time. And I still think it's going to do very well. It's just barely breaking out. It's very volatile. I get it. A lot of people aren't able to hold on, but not this guy. This guy's going to hold on. And I'm riding Mosaic as well. Mosaic and Intrepid Potash are my top two. Nutrien's really good. CF Industries is really good. I wish I saw UAN at the bottom. There was another one too that I wish I saw. I can't remember the ticker symbol, but I didn't look through the entire sector in its entirety. I didn't do the analysis. I thought at the time with the money that I had, I thought that oil, natural gas were better buys, and they turned out to be better buys and had more leverage. And I also do a lot of fractal analysis in the charts as well when I look at things. I look to see how much bounce something has and start doing measurements or looking at the price to see maybe if there's a lot of short sellers there, if there's that fractal where you go from like $1 to $10. That's a huge fractal. Like I call it the genetics of the code that is behind that stock. It's the bounce or volatility that it could potentially have to the upside when things go right. So I look at all of those things, all of it, absolutely all of it. And you know what I do? I invest across all those in the cheapest, most leveraged sectors that I can find for this commodity bull market. What's really interesting, and Scott touched on it as well in his interview, and I believe it too, is that we are at the beginning of this. Why do we think that we're at the beginning of this? And we're going to discuss all that stuff in another interview. I think. I think. Remember, it's not scheduled yet, but hopefully he wants to come back on. He's a good guy. And we can discuss all that stuff and go back and forth and talk about all these different topics. He has a deep understanding. He's researched the market probably, like I have, and we've looked at it from two different viewpoints. We are both from different countries. We are from different backgrounds. He has a job that's completely different than mine. So we have very different backgrounds, very different outlooks, and the way that we came to conclusions on almost all of our companies are the same. We ended up all with the same companies. We ended up with the same developers and the same thoughts, the same explorers. I mean, everything. It's weird. It's really weird. And we came obviously from way different backgrounds and way different evaluation, measuring sticks and all sorts of stuff like that. So I think that's really, really cool that that happens. Now, here's somebody who says DNN could be a takeover. And what I've found from my investing over the years is we don't want a takeover. Takeovers, usually they give some premium, 20%, 30%, whatever it is. You get some premium, and then the assets get transferred over, and it's really a snapshot partially of that time. You get some sort of premium. If you ride it and they can create value for the shareholder, you make so much more money. It's like ludicrous amounts more. I would rather not take a 20% gain. I'd rather take a 20 bagger. That's the difference. And these companies that are being bought out, specifically like Deep Yellow or Encore Energy that's buying out assets, I'll just say this. They're stealing assets. Like they're getting them cheap. And I would want to be on the side that is accumulating those assets. I don't care if the stock goes down in the short term. I'm going to buy more. Doesn't matter. In the long term, that value will be realized at much higher prices. So I think that they're getting very good deals for what they're buying. I would not want to get taken over. I would want to ride I want to ride the bull market higher with these small companies with very small market caps that can explode higher. I don't want to be bought out. So, for instance, we had a buyout. I had an awesome company, guys. I'm very sad that our company got bought out. QEP was a really good company. It was a highly leveraged small natural gas company. And I thought, man, this thing's going to go. I was loading into it. I was leaning hard into that thing and buying it. And then Diamondback Energy bought them out. I was like, man, that stinks. Because they had a lot of bounce. It was kind of like a centennial development. And that was my natural gas play. Same with SM Energy. That's what got a lot of bounce too. So my cheetahs were SM Energy, CDEV, and then QEP was another one. Crew Energy was one, CWEGF. I own Antero Resources as well. Russell on the channel brought that one up. And then I also own Athabasca Oil that someone brought up. That was at 16 cents. And I still hold these. There's no way I'm selling them. There's no way. We are so early in this, and they're all just turning up. These patterns that are massive and have rounding bottoms like that, they don't just fizzle out. Not across an entire sector like this. At least that's my opinion. I think we're going to run. It's going to be a good run. I think we still have years ahead of us. I know there's a lot of people who think, oh, this is done. The commodities, when they go vertical, they're going to fall back down. We might have a shakeout. And I don't think it's done. Even if we have a shakeout, we might have a violent pullback and then it just explodes higher again. And those are really hard to sit through. You're going to need, people like myself to help you because it is violent sometimes and it is scary and your portfolio gyrates all over the place. We had a pretty big pullback in uranium and all I did was buy more. I bought more at that, what I thought was the bottom and I got a pretty good time, pretty good area of me buying in at that bottom. And I mean, if you guys need help, definitely sign up to my website below. It'll help you basically become a better investor. And I have a lot of training sessions, the Platinum membership. We do weekly meetings and you can ask questions. And I don't hold back, guys. I give you everything. I give you all the good picks. I give you all the reasons why. And then eventually we'll go into more training and more questions. There's going to be a huge overlap of a lot of things. This channel, the website, and the website's going to be even additional support to everything. And what's going to happen, and this is what I hope happens to everyone who's on the website and on the channel, eventually as you guys become very comfortable with holding stocks, with holding assets that are going to appreciate during certain market conditions. And what happens is you're going to get this confidence that you didn't have before. And then some of you are already noticing this. I guarantee that some of you already know it. And what you're going to do is you're going to start laughing. You're going to say, platinum going down, I'm going to buy more. That's all I do. That's all I do. I laugh at it. And then I buy more. And you know what? Eventually, I don't know the exact timing. Eventually, if we go to a hydrogen economy because we don't have the minerals to do batteries, you've done the research, you've looked at hydrogen, and if hydrogen goes into play for whatever it is, it could be for trains, it could be for ships, something that is very large, very heavy, that takes a lot of energy. So you need a very energy dense source that batteries can't really fulfill very easily. Maybe like aerospace and big ships and big trucks. You need high energy density stuff. Hydrogen is going to be great for that. But guess what? It takes platinum. And platinum is a superior element for that. There's nothing really to replace it. All they can do is try to shrink the usage per usage, but that even makes the case for higher platinum because your per unit cost goes down. It's beautiful, guys. It really is. It's a beautiful metal. It's one of my favorite. It is my favorite metal. Platinum is, and silver is in a. The problem with silver is if you get enough wealth and you start buying the heck out of it, you run out of spots to like store it. You get so much of it. So I'm a big fan of the energy or the value density of platinum. It's not as dense as some of the others, but it will be when it goes way up. So I mean that's the physical platinum. I really do like physical platinum. It's by far my favorite, and it's scratch resistant and it's super high heat in terms of a melting point. So it takes a lot of energy to get out of the ground, a lot of tons. It's very, very low grade, and it takes a lot of heat to melt this stuff down. So if energy goes up, you've got a bar of stored energy that takes some of the most energy to get it into that platinum ounce. You know, that 1 ounce bar or coin or whatever you want to call it, whatever you own that's in your hand. It says, bravo, this was one of the best interviews I have seen between two experts. Super informative. Thanks for setting this up. Yeah, I reached out to Scott because I was looking at his webpage, and I was like, dude, this guy is on point. Good job. He basically is a what I thought was a very close mirror image to me, because we were looking at the things roughly the same way, roughly, and we were coming up with the same conclusions. So yeah, it's we're gonna have more discussions hopefully if he wants to. Thank you, Andy and Scott, for making this available. It makes me nervous when we get too easy money focused, because it blinds critical thinking. But love all the big patterns and paradigms that were brought out in this interview. Appreciate seeing you learn with the rest of us. Makes it more real. Yeah, that rock dropping, the one where the ratio just drops off the ledge for super cycles. Man, that thing is awesome. I didn't even notice it when looking at the chart. He brought that up, and I was like, wow, that is insane. So we'll get him. Hopefully, we'll get him on here again. We're gonna do some cool stuff with him if he decides to do so. And yeah, it's gonna be a fun time, guys. Give me a thumb up for the content, guys. Subscribe to the channel. One last thing. If you guys are interested in a training session, put it technical trading. So technical analysis trading session. Put it in the description link below. Let me know if you would be interested. Now, it's not going to be free, and if you're part of the website, if you have a membership to the website, I will give you a large discount. If I get enough people that are interested in a technical analysis training class. So we can go over. We can have different levels if you'd like. Perhaps some of you guys, you may even be almost better than me at technical analysis. We'll see. But we'll get together, and some of you people who are learning, maybe we can have like a beginner class and maybe an advanced or expert class. Let me know if you guys are interested. Put it in the comment section if you guys are interested in something like that. I don't know the pricing. I'm just kind of thinking this up off the top of my head, and anyone who's a member of the website would get a very large discount if they want to go to that and you're part of the website. All right, guys, give me a thumbs up. Subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.